It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Wednesday evening, July 13th, 2016. There haven't been any shortage of trading opportunities this week, and tomorrow is setting up to be another big day across all of our favorite futures markets. Crude oil and the S&P are bearish, while the gold and euro are bullish going into Thursday's trading session. I got a great newsletter for you guys tonight. Got a big day ahead of us tomorrow. But before we jump into our charts and put together the strategy for tomorrow, I do want to remind you the only place to watch the full-length version of this newsletter is here on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry. There's a link right in the description of this video. Follow that link. Come over here and join me on the blog at Sideways Markets. And don't forget, while you're here, grab your free pass. Come out and join me as a guest in our trade room. If you're not an advanced member, of course, and you'd like a free pass, you can grab that free pass in the upper left-hand corner. In the lower left-hand corner, don't forget to register for the mailing list. I'll send you an email every evening when the nightly newsletter goes live. That way there's no more waiting around for when that newsletter goes live. I'll send you an email every evening when it's ready. Below the video tonight, you'll be able to download all the charts you see me using in tonight's video. Follow that link below the video on the blog. And don't forget, you'll learn more with me in 1 week as part of my free trial than you will anywhere else on the interwebs. I can guarantee you that. Grab your trial membership on the right-hand side, and I'm always standing by to help you guys and gals out, right, if you have any questions along the way. Hit up the live support button on the right-hand side of the website, and I'm standing by to answer all of your questions. Let's not waste any time. I got a busy, busy day tomorrow. Let's check the schedule, and then we'll jump into some charts here and get ready for Thursday's session. Now, before we go to Thursday, though, we do have some news coming from our good friends down under. We get the labor force survey tonight at 9:30 p.m. Eastern Time. If you're trading the Aussie markets, trading the Asian markets, be aware that will definitely be a market mover in the early session tomorrow morning. And of course, if you're going to be with us in the chat room for London, we have the Bank of England announcement at 7 a.m. tomorrow morning. Don't forget, that will be the major news of the London session tomorrow before we jump into the U.S. session at 8 a.m. And of course, when we open up our trade room. Jobless claims at 8:30 tomorrow, PPI at 8:30, and then of course we go all the way down to news tomorrow night from China. So tonight we got the labor force survey from Australia at 9:30 p.m. tonight. Tomorrow morning at 7 a.m. we're going to hear from the Bank of England. Jobless claims at 8:30, PPI at 8:30. We of course open up our trade room tomorrow morning at 8 a.m. Eastern Time. Our chat room never closes, so we'll be there with all of our students before the opening bell tomorrow in the U.S. And then tomorrow night we got the GDP, industrial production, and the retail sales from our friends in China. We'll talk more about that in tomorrow night's newsletter. Got a nice day filled with news, basically from wire to wire tomorrow. That should hopefully get us started and then finish off the session right in the U.S. session before we wait for Asia to open up, and we'll talk more about that in tomorrow night's newsletter. You guys are scheduled for tomorrow. Now let's grab some charts. Crude is bearish and completed the measured move target after today's inventory report sent this price tumbling. The bears took control of this market at 10:30 a.m. Eastern Time this morning with a spike in channel and completed their measured move, which tells us to expect a two-legged correction back to prior resistance levels overhead for the next leg down tomorrow. With such a strong bearish trend, we assume that sellers will be scaling into this market as far back as the battle zone, just shy of $46 a barrel tomorrow, which gives the buyers an opportunity to hold a pullback and take short-term control on the way to overhead resistance targets above. Sellers have a target back at 44.56. And then if they can close it strong below that low, the double down target and the triple measured move target will follow, of course, if they can get through that 44.56 tomorrow. Looking at this chart right now, it's pretty easy to tell. The bears are definitely stacked here, waiting to sell as this price goes higher. All we need now is to get this price up off these lows and enable the sellers here to start to scale into this on the way back down. A couple of things you want to be aware of here. Obviously, the spike in channel that began the day today, or should I say began the move down. This spike in channel already has a break and retest, which definitely tells us now the short-term objective has been met. Now we're expecting to see the larger two-legged correction back up and then that buyer failure right back down. Heads up too, there's also a potential here for a larger spike in channel. So watch out for that trend line lining up with that 45.54. That'll be some pending resistance that we'll see if they want to use. We won't really know if they're going to use that until we get there, right? So depending on when we get there, be aware of that. The measured move target has been achieved. Whenever we get a measured move or any market objective, we now look for profit taking from the bears, bargain hunting for the bulls, looking for a two-legged correction back up to a prior area of resistance. That resistance is likely to start here at 45.24, 45.54, and of course the battle zone up at 45.64 up to 45.89. In all reality, I would imagine that 45.92, that's ultimately going to be where the bears wave the white flag and give up on this thing, which means as we go higher, buyers need to hold this pullback if they're going to get anything going here right now. Very typical situation, a strong bear market. Do not buy this market until it turns into a bullish market. How does it turn into a bullish market? With a pullback, right? Hold that pullback back to the moving average, and that will give the bulls the confidence now, and that should produce some sort of measured move. And so look for that AB equals CD going back higher here if you're a bull. If they're successful with that, that's going to be the window of opportunity there for the bulls. But watch out, though, because as we get back up into this area here, this is where sellers are going to be looking for those buyers to fail and sell it back down. Remember, this whole entire time we're pulling back right now, we have to assume that sellers are selling here. They're selling more here. They're selling more here. They're adding to their position here. It won't be until we can break and hold above that area that those swing sellers, the sellers who are scaling in bit by bit, piece by piece, adding to a large position, they're not going to get forced out of this market until we can get and stay above that 46. And if they can, of course, their target will be back up at that 46.71. So buyers, keep it close to the vest tonight, because we definitely know that if you fail here, sellers will be attacking as we go back down to retest targets. The ultimate objective right now is back to that 44.56. Now, if we do get back to that 44.56, look for a strong close, a hold below, and then possibly, this of course is very much a variable right now that we don't know enough about, but take that A to the B leg, copy it down, right? And that's where a potential, right, triple measured move is going to be waiting. Right? Again, kids, don't forget, we don't know where that level is going to be yet, because it's based on how high we go right now, right? So if they hold this pullback, right, and this goes much higher, you know, if we end up pulling back all the way, say to, for example, 45.54, right, then that triple measured move puts us down at 44.39. So it all depends on how far this pullback is going to go, and then we'll know more about that tomorrow. So buyers, you guys got to hold that pullback right now to have any hope for this price to go higher. Don't get greedy, though, because the battle zone will be waiting for additional sellers to come in and capitalize on buyer failure from there. Remember, as we pull back, if you're a patient seller like I am, as we pull back here, again, if the buyers do hold, we go higher. If they don't, sellers sell into it. Let's assume they go higher here. As we go higher and we complete that measured move to the upside right now, again, I don't know what's going to happen. All I know is where the most reliable trades are going to be tomorrow. I'm looking for buyers trying to buy that pullback and fail. That'll be the most aggressive trade. Holding that pullback, that's going to be the one that sellers are really going to be trying to sink their teeth into. And then, of course, pull back on the way back down to the low of day for that final target. Got a beautiful opportunity here for sellers to get in at a much higher price tomorrow. We'll see if the buyers give them a run for their money. And don't forget, we'll be doing it together with you guys and gals at the trade room tomorrow morning at 8 a.m. Eastern time. S&P is slightly bearish and rotating back to the high of a very weak bear channel this evening. The bears have a slight edge in the market this evening with lower highs and lower lows, but they missed their measured move target by less than a point, which tells us this is either unfinished business down at 2139, or we're going to see a trap high above 21.48 before the sellers get another opportunity to get back to the lows tomorrow. The bear channel is considered weak because it's almost flat. You know, we don't have that 45-degree angle that we always look for with either a bull or a bear channel. It's almost flat, which ultimately allows both sides of the market, the buyers and the sellers, to make money as it rotates back and forth, which is surely going to cause some chop around the highs, right, that we'll be prepared for. Buyers want to buy pullbacks up to the highs of this channel and then look for a successful breakout pullback above the channel high for a target up at 51.50 and 52.25, while the sellers need to wait for buyer failure and then hold a pullback of their own for a move back to the low and possibly down to 34.75, where that double down target will be waiting. Now, as we're opening up right now in the electronic session, we can see here right now how that strong red candle pushing lower really makes it difficult for the buyers to buy this pullback right now, which means as this market pulls around, this is where the sellers are going to want to come in, hold that next pullback, right, and go gunning for that unfinished business back down at that measured move at 21.39. On the S&P right now, we can definitely see that bear channel. Right, we can see that bear channel, a little bit of unfinished business back up at the high of that channel. There are a few different ways that you could draw that bear channel. Another way to draw it is to draw it off the high, and then of course that creates the low right there. So let's say, for example, here now, let's get rid of that one. Right, let's say, for example, now that we know a little bit more about this market here, now that gives us a little bit steeper potential channel here. Again, this is the first candle. We'll see how this candle closes. A little bit steeper channel down now. And now, of course, the measured move target and the low of that channel right there. The low of that channel, of course, being the objective on the way down to that double down. This is one of those channels, like I said before, where the buyers actually have opportunity here to buy pullbacks because it's not the steepest thing that we've ever seen here. So be aware of that, right? It all really depends on how this candle closes right now. And again, sellers, you guys want to see this, again, new lower low here. Make sure this candle closes strong below that 44.5. Hold that pullback. And then that's going to be the trade that you're looking for on the way back down to that measured move, the low of the channel, right? And of course, the double down at 34.75, we'll call it. Now, this may also be a trap low. Let's be honest here, right? We get a bull channel as well. This bull channel is also quite interesting. And what do we know about a bull channel? We know that buyers will be looking for traps below these prior swings. That's why it's so important that if you're a seller right now, you hold that pullback to the moving average as this thing corrects. New lower low, hold the pullback, right? And that will give you the green light. Because if they can't, right? If they can't, then all of a sudden now, this goes back to being seller failure, trap low, and a move back up to the high at 48. Like I said, the fact that they missed that measured move target, that's a big deal. That's a big deal. This is the S&P we're talking about too. This is a freight train when it gets moving, right? Highly liquid, a lot of volume. There obviously was something wrong there that it didn't get that measured move at 39.25. That either means we have unfinished business, right? And these buyers are just simply capitalizing on some sort of third-party stimulus, economic news, natural disaster, political state. It doesn't really matter, right? But this means, of course, now if the sellers can hold it, they finish off, right, the measured move down at 39.25, and then, of course, we'll look for that double down target at 34.75. This may also just be a trap low with this bull channel, and with that trap low, sellers cannot hold the pullback. Buyers here will be hunting for the 48 and possibly all the way up to that double up target and back up to that high tomorrow. It's all going to depend on what happens. I assume this candle will close bearish. After it closes bearish, as long as it doesn't close the big wick at the bottom, if we see a big wick at the bottom of this candlestick, then that will tell you that buyers are scaling into this move. And that will obviously tell those sellers to be patient right now. I never recommend selling low. And so if you sell now, you're selling low. So you want to look